Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So we're going to look at the overall portfolio today. And we are up around $300 during the market being open, but afterwards it's down about $41, so not too bad. For the week, we are up $36. For the month, we are up over 2 grand, up about 4%. The 3-month mark, we are up $3,500, up 7%. Year to date, we are up 5.85%, up $2,915. The 1 year mark, we were up $3,290, up 6.5%. And then all time, we are up $17,408.56, have a total return of 49.26%. We have a buying power of $129.47. So we did get paid by realty income, that like $40. And then we had 86 in there. So now we have about 130. And we're just waiting on that T. Rowe Price dividend to buy either a share of Apple or Google. I'm kind of going back and forth as of right now, but we'll see what's a better deal when that T. Rowe Price dividend hits. So jumping into the portfolio, we've got realty income. We've got 170 shares, $8,800 worth of market value. Average cost is $65.03. About 17% of the portfolios in realty income. Today we are up $5.10. Total we are down $2,100, down almost 20% here on realty income. So it really hasn't moved over the weekend. I'm not surprised due to interest rate changes and the overall market not liking REITs. I'm not surprised to see that still being down. But it is a good cost on average opportunity. Next, we've got Coca-Cola. We've got 15 shares, $900 of market value. Average cost is right around $61 per share. 1.71% of the portfolio is in Coca-Cola. Today, we are up $4. Total, we're down $5.92. So we are down a bit here on Coca-Cola. Not down enough for me to really want to jump in and add shares because I'm not down that much. So I'd want it to be more like $55 per share before I start pouring money back into Coca-Cola. Then we've got Altria. We've got 320 shares, $14,000 worth of market value. Average cost is $47.27. 27% of the portfolio is in Altria. Today we're up $2. Total we're down about 900, down about 6%, but we were down a lot more earlier. So we're almost break even here, down just a little bit, but I'm patient. I love the dividend income that Altria brings, and right now it is enough to buy, I believe, a share of Google and Apple every month that it pays. So I'm really happy about that. Next, we've got Apple. Now, this is one of my personal favorite stocks. I need to get more money into Apple. So we've got 1 share, $173 worth of market value. Average cost is $132.66. 0.33% of the portfolio is in Apple. Today, we're up $1. Total, we're up $40, up 30.87% here on Apple. Now, this is one of my favorite companies. I believe it will be either the biggest or second biggest position behind Visa or in that number 1 spot. So this is one of those positions that I'm patiently waiting for it to go down on a dip, but I might just, bite the bullet and buy a couple more shares. I love the company. I love all of the revenue that it brings in. I love how it allocates capital within the business, and I'm actually reading a Steve Jobs autobiography, so I'm falling more in love with Apple every chapter I read. So I have watched the Jobs movie, so I know a bit of the timeline when it comes to Apple and Steve Jobs, but it is really interesting to read the biography and getting takes on different people and Steve himself talking about the creation of Apple with Wozniak. So that is definitely going to be one of those that I want to have a top 3, top 2 position really in the portfolio. But it'll take time. I mean, Apple is one of the best companies in the world, and it's going to be, it might be a while before it sees a significant dip. So I don't mind being patient, but I do want to get a few shares here and there. I just don't want to get it at a 30% markup from my original cost. Next, we have got AbbVie. Now we have 95 shares of this pharmaceutical company, $16,000 worth of market value. Average cost is right around $95 per share. Now 32% of the portfolio is in AbbVie. Today we're up 74 bucks. Total we're up nearly 8 grand. We have an 87% return here on AbbVie. Gotta love that. And the dividend has grown since I bought it. So we've got massive capital appreciation and a massive dividend growth rate as well. So, I mean, you gotta love that, right? It's a double compounder. It's compounded when it comes to the stock price and to the dividend as well. So holding this company long term is something I plan on doing, and I will not sell a single share unless there is a massive dividend cut. But as of right now, I'm comfortable holding it, and it is one of the biggest positions and the best performing overall position in the portfolio. And then finally, we've got T. Rowe Price. So T. Rowe Price was sitting pretty at 100 shares, $11,000 worth of market value. Average cost is right around 110 per share. 21% of the portfolio is in T. Rowe Price. Today, we're up 24 bucks. Total, we are up $537.11, up nearly 5%. Now, guys, this is one of the holdings that has been down. Not necessarily this year, but within the past year, it has been down overall, and then 6%, but it's been down pretty consistently, and it's kind of building back up here. But the real value that I see in T. Rowe Price is right here. So if you go back a couple of years, just a couple of years here at 2021, it was valued at 200 bucks a share. So this was during the whole COVID pandemic right here, built back up, and then interest rates went up, and there's been a lot of different stuff going on. But, it's going to ebb and flow. So I see this as a 50% upside from my buy price. And so I plan on holding T. Rowe Price for the long term. The dividend has been growing. It isn't growing as much as, say, AbbVie is, but I do see the potential for a really good overall investment here if I just sit and wait. Now, if the overall stock overall company goes down as T. Rowe Price's stock price starts to fall, I wouldn't mind buying more at around my average cost, but I'm going to sit and wait. This is just the same thesis as Apple, right? Great company, great management, very well run, plenty of cash flow to grow that dividend and reinvest back into the business. So I don't mind sitting and waiting, being patient for a good opportunity. Next, we've got Visa on the watch list. Now, this is one of my personal favorites, probably a top 2 foundational stock for me. I wouldn't mind the top 5 being Apple, Visa, and then I would want it to be Google, Coca-Cola, and I wouldn't be surprised if it's T. Rowe Price eventually. But Visa is the largest payment processing network in the world, and I swipe my card all the time, whether it's at the gas station, buying gas, getting food, going out to dinner for dog and cat food, groceries, whatever, right? I swipe a Visa card a lot, right? And I'm not the only one. Billions of people do. Millions, billions, however, around the world swipe a Visa card. So it's one of those that I know that their moat is very wide. They are very competitive. They're the leader in the space, and they have market share. So it's one of those that I feel like is a no-duh investment that I just need to put money into. I just don't have the cash right now to be putting money into Visa. But eventually, maybe next month when Altria pays me that like $300 dividend, I might, instead of buying, say, Apple and Google, I might end up buying Visa if I like the price. And then next we have Google. Now, this is one of my personal favorite companies simply because I use Google all the time, as well as I use YouTube a lot, and of course I post videos. So when I post videos, if I own Google, it's like I'm getting paid by every content creator that creates content on YouTube on a daily basis. I get money from those views. I get money from those advertisements. So that's how I look at Google, and I'm excited to own it. This is one of those that I've waited a little bit, and the stock price has gone up, but I'm okay with that. I would be comfortable buying Google at around 170 a share. So in my eyes right now, even though it is up a bit, I still think it is undervalued, and I don't mind buying at this price. So Google is definitely going to be in the top 5. Wouldn't even surprise me if it was spot 3 or 4. Next we've got Berkshire. Now, Berkshire is one of my favorite companies simply because I love the companies that are owned within Berkshire, that it is and has a controlling stake in as well. So this is one of the biggest conglomerates in the world. They have multiple businesses. So they have a railroad, they have insurance, they have chocolate, they have a plane business, aviation business, they have a paint business. They have so much so much when it comes to diversification, and so much that they do, that it's kind of hard to pin down their intrinsic value. And it's kind of one of the games that shareholders try to do. And somebody always asks during the meetings how to calculate the float from like General Re or from Geico or these other businesses, that it's kind of difficult to identify the intrinsic value of a single business, let alone a business that's comprised of hundreds of businesses. So it's one of those, I think, interesting stocks to look into, simply because of the makeup of the company. And of course, I have confidence that they are going to be able to reinvest capital at a satisfactory rate. So I want to own shares of Berkshire. I would not be surprised if this one ends up being a top 5 foundational stock as well. Just simply because I love going to the Berkshire meetings, and I listen to the Berkshire meetings all the time. So I love them. There's a lot of nuggets of knowledge in there from Warren Buffett, and I love reading the annual reports as well. So love Berkshire. And then finally, of course, we've got Meta. So Meta has shot up due to the fact that they're paying a dividend now, but I want to own it because I like the ads. I like the ad revenue, right? I like the business model. So they are, for me, they're a lot like Google, but Google is basically search advertising, and Meta is social media advertising. So it just depends on where the eyeballs are at. But they do also have competitors, which I think they innovate well enough and diversify their business well enough that it won't be a problem in the future. So that was the big issue that I had with Meta. But as you guys probably watched the video, I lost like $40,000. Not technically lost because I didn't put the money in, so it's like an unrealized loss. But I knew to buy it at 88 and I didn't do it. So like the $90 range. So I would be up quite a bit, and I'd be making, I'd be well above my $50,000 right now. But you live and you learn. So that's why I have Meta on the watch list. It's one of those that I could say, just like Apple and Visa too, that I've looked into, that I have not owned in the past, but I should have just put the money in. So this is one of those no-duh investments, along with Google as well. So with that being said, guys, eventually I will own all the stocks on my watch list. I'm waiting for prices to go down a little bit because the market's been up. But I'm going to be patient. I'm going to look for value within the portfolio, and I think long term it'll pay off. So with that being said, guys, remember to hit the like button if you think it's funny I lost money on Facebook, and make sure you hit subscribe on my channel, that Dividend Guys, so you stay up to date with all the portfolio updates. All right, guys, take care.